As discussed in the last video, a lot of people wonder when they should start saving for retirement. When and how regarding any financial topic are the two main questions I get from clients, followers, family, and friends. This develops into a deeper conversation around setting financial goals, which is such an important part of becoming financially independent. In this video, I'll discuss the 5 financial goals everyone can and should reach. 5 goals can be overwhelming, so we're going to take each one at a time and see how we can organize them with the budget setting tool. To receive your own copy of the tool, subscribe to my email list found on my website, millsknowsbills.com. And to make sure you don't miss out on any other videos about practical budget setting tips, information from experts, or other personal finance help, subscribe to my YouTube channel here. New videos will be posted every Tuesday, and trust me, you don't want to miss out. The first 2 goals are topics we've already discussed in previous videos. The first one is having an emergency fund set up, and the second one is starting to save for retirement. If you missed out on these 2 videos, go back and watch them before continuing this video. Let's briefly review these 2 goals and why they're important. Number 1, having an emergency fund set up. Having the proper emergency fund set up will help mitigate against unforeseen expenses and circumstances. So it's important that you set aside a portion of your discretionary income to save enough to meet your emergency fund goals. If your standard of living changes, for example, you move and your housing expense changes, make sure that your emergency fund is increased or decreased respectively. Number 2, starting to save for retirement. The sooner you start saving for retirement, the better. And if possible, try saving 10% of your income. That's a hefty percentage to start saving right away if you're not already used to saving, so just start with what you can. Once you get the hang of it, increase your percentage in increments until you reach the 10%. Then set a higher goal for yourself. If you need a refresher on either of these 2 topics, go back and watch the respective videos. Trust me, they will shed a lot of light on these scenarios. What big financial goals do you have? Leave a comment below. I'd love to see your answers. Now, let's discuss the final 3 goals that haven't been introduced yet in previous videos. Number 3, planning and saving for vacations. There is absolutely nothing wrong with wanting to take vacations, but don't go into debt for them. Instead, plan ahead. Be realistic in setting a budget for your vacation and actually save for it. Once you have the money to go, then go and enjoy. There is little worse in the world than going on a vacation and then coming back to worry about how you're going to pay for it. You can allocate a portion of your discretionary income towards saving for your vacations. Number 4, preparing for large purchases. Large purchases include buying a house or car. Much like saving for retirement, these can be scary goals to set and save for. So don't overwhelm yourself. Do your research on how much you think your large purchase will cost you. Give yourself a timeline and start saving the amount that you'll need each month. With large purchases, you have the option to bring in financing. If getting a loan is a route that you pursue, have a decent down payment saved up. Make sure you shop around for interest rates to get the best one and confirm that you can actually afford the monthly payment. If you need a refresher on debt, go back and watch my debt video. Number 5, becoming debt-free. A big goal for this generation in general. So how is this possible? Debt stacking or snowballing. This is actually how my husband and I have been able to become debt-free except for our mortgage. But what does debt stacking mean exactly? In general, it means that once you've paid off one debt, you take that monthly payment and you tack it on to another monthly payment for a different debt, and you continue this cycle until you have completely paid off your debt. The reason why this is so easy to accomplish is because it's money that you're already used to paying towards debt. It's not additional money coming out of your pockets. However, if you'd like to help expedite the process, you can set a portion of your discretionary income towards one debt to start. This is a big topic in general, and I know examples will help. So I have a video on debt payoff coming out in 3 weeks to give you more insight. So that's all I have for you today. Just to recap, the 5 financial goals that everyone can and should reach are having an emergency fund set up, starting to save for retirement, planning and saving for vacations, preparing for large purchases, and becoming debt-free. If you've watched this video and don't have my free budget setting tool yet, subscribe to my email list found on my website, millsknowsbills.com, to get your very own copy. If you learned something new, please like the video below. And to make sure you don't miss out on future videos, subscribe to my YouTube channel and click the bell icon so you're notified every time a new video is posted. Thank you all so much for being here and for watching, and I will see you next week.